So really focusing on the right screen here. The left is a big simulation. Really a choppy session. This is very ugly looking. We got short here at the top of that range and hit first target. Looks like we're going to get taken out right here on its rail.
Order filled.
Here we are at the end of the day. This is the first half hour. You can see really ugly. I think we saw live this short here. Certainly when the market is sideways and range bound, this is what you want to be doing. Short at the highs and long at the lows. It doesn't get much better. Yeah, this is still pretty ugly here, all the way through here. All right, that's 7:30, so the first hour. We do get this nice spike up here. It would have been nice to catch some piece of this. As it happens, I catch the pullback long here. All right, now the short here you're not going to catch. That just falls directly off, so I'm not worried about that. It's the next peak that you'd actually like to catch here, because this falls nicely here. So this is the best move of the day here. I was long while this was happening, so I don't get to participate in that. So my result for the day, though, 310. Given how ugly this was, I'm really pleased actually with that result, because this was just nasty here. Curiously, the overnight was just wonderful. If you look at this, here's the London Open here on the left, and you get this nice test of the high that fails, and then you roll over, and this beautiful long run, a couple of nice long runs down, and then another one up. This is what we would like to see during the U.S. session. Instead, we got this choppy, ugly mess, and what saved me today and really this week is it was actually a plus week for me, even though the trading was the market was really ugly this week. Is I was using the model that's built for volatility, and then having switched to two contracts on model on a $10,000 account. That helps a lot on days like this where you're hitting first target, but then not much else. So these kinds of moves here, when you're hitting a single contract, you don't make anything, and then there's nothing. You don't have any profit there to help you withstand just a normal loss that then comes up. Same thing here. This next move, if you look at it, as a single contract, you're going to make a couple hundred on that. You're going to make this. You're going to make the amount that's made here, right here, this one. So the first contract gets taken off there. It happens to go exactly 40 ticks and then pulls back 20, and you get taken out there. If you're targeting, before machine learning, I would target 10 points or 40 ticks. And so I would have made more in that case with a single contract, because the risk is half. But since with machine learning, we're taking a lot more trades, so and we're aiming higher now. We're aiming for these 80 tick runs and then adding. So this is why we'd like to catch the short here. Right there is where you'd catch it, right? And then you add on that break. And what would be interesting to do is run this day with the the non-volatile model. It was a kind of a difficult choice here, because when we look at the volatility, this is the average daily range here. This yellow rectangle is showing where when we push above that red line, that's 100 points average daily range. Then we switch to the volatility model, and really what that's doing is it's recognizing that higher volatility means that there's more noise in the market, and so we're pickier with the trades that we're finding, because we're trying to. It's more difficult to separate the signal from the noise when there's more noise, right? But what happened here is at midweek we started to fall below that threshold. So technically I could be using the more, the normal market model, the more aggressive model. That's why I say it would be interesting to run today and see how it does. Typically speaking, when the market is doing this kind of ugliness, um, you, the the chop avoidance helps a lot, but the that quieter market model, it's almost like a more aggressive model, is taking more. You're getting more of these signals, and you can get chopped to pieces here. So next week, I think we'll see that we're below this threshold here. So I'll do the more normal market model, and then we'll kind of see. It's been, when I look at this, one of the things we've been talking about in the weekly updates is it kind of looked like right here we'd be headed back to normal. So normal would be where you're basically never breaching this 100 point average daily range. It's really rare, right? And most of the time you're below that, right? But that hasn't been the case, right? Volatility has stayed really high. So volatility equals unpredictability, right? Volatility equals more noise in the market. So it makes trading more difficult. And I think one of the problems people have is that there's really two that I'm seeing. One I've always seen is that when people see these big moves, they get stars in their eyes and they want to participate in that move, and not understanding that it's a much riskier trading environment. The second thing is that nowadays this level of volatility has gone on for so long. February, March, April, May, June, 5 months, and we're almost all the way through July, 6 months, that people have forgotten that this is still really volatile, and don't recognize that you need to be careful, right? Caution is the watchword here with this level of volatility. When the ranges are this high. So what we're trying to do is basically when it's choppy and ugly like we saw here, just stay alive, right? Trying to catch this move here. All right, and this move here will pay for the week if you catch that. You catch it and then add there. You're going to make 5 points and then 2 times 20 points on one trade. And that's kind of the way it works out. So you're just trying to hunker down and weather the storm until the sun comes out. And that's the nature of trading right now. That's actually, I think, the nature of trading in general. But when it's this volatile, even more so. And so people keep trying to, I think they keep trying to be aggressive. And this is actually not the time to be aggressive. It's the time to be more cautious. So something to think about. Next week we'll see. I mean, again, it looks like we're starting to quiet down here. We're at the highs. These are all-time highs, 7,400 up here. And so we'll see. That looks like declining volume to me. So, but I've seen this a bunch now. This climb here had declining volume too. And these are typically signs of tops. So I've been thinking that we're topping out here. But we'll see. I mean, I just trade what the chart's showing me that day, and we make our decisions in the morning, and then off we go. Doing some work with the volume profile now, working to add that into the machine learning decision-making process. But that works in its early stages. Here, 17.75 points, just by looking for low volume nodes. In fact, I'm curious. Did that find that nice move down? Let's see here. No. You can see it's just ugly. Yeah, I don't like the way this is behaving. So a lot of work to do here. So check out next Saturday's update webinar. We'll have some more doing more things this weekend on this model. This was like data collection, and now having collected some data, I want to make some adjustments, and then we'll see what happens there. So ideally what we're trying to do here is, if you see this profile here represents the structure of the market, this is the structure of the market at the end of the day. But as the day is trading, you can see that profile developing, and so we want to add this larger view of the market to what we're doing over here. All right, and it's not clear yet exactly what form that's going to take. There's maybe half a dozen different ways to do that, but right now we're in data collection mode, and we'll see where that takes us. I don't have I can see 3 or 4 different paths. I'm not committed to any one of them. I'm not married to any particular way. And I just want to see the data. I'm going to let the data and the machine learning system take me to the destination. Okay, so that is it for the week. And there's no update webinar next tomorrow. So we've changed that to every other week. So that'll be next Saturday, the 28th at is that the 28th, the 29th? Yeah, the 28th. At 11 o'clock now. Okay, used to be at 2 o'clock. And you can sign up for that on the main page. I actually think I haven't updated the main page to show the correct time. Let's take a quick look here. I think I have not done that yet. Yeah, it says 2 o'clock here, but it's really 11 a.m. So all the reminders will be correct. I need to fix this so that people don't get confused. Okay, that's it. Take care. Have a good weekend.